Hello again and welcome to Money Matters. As the local stock market plummeted deeper into bear market territory, stock pickers have found refuge in good-yielding staples and telecoms. Douglas George asked three analysts for their investment recommendations in a triple header of Head2head.
Daniel So leads off our triple challenge with his first choice, coal producer Yancoal, Australia. Stock code 3668. Coal, you say? Yesterday's fossil fuel? Daniel says Australia's #1 coal producer is a good hedge against geopolitical risk. If conflict or tensions increase further, price of coal is expected to climb. Why coal?
This stock is trading at very low valuations. According to this year's earning estimate, its PE ratio is lower than 2 times, and its dividend yield is more than 20%. Due to the high rising coal price and the strong earnings growth expected for this year.
The price-to-book value is just above 1. Coal prices can fluctuate, but Daniel says given the rock-bottom valuation, it's worth a buy. He expects the high dividend payout will continue to attract investors after the company paid down a good chunk of its outstanding debt. The company may not be on anyone's ESG investment list, and that, he says, is the company's main risk.
ESG is, of course, is increasingly investors' mind, and coal producers may be regarded as not fitting in due to its pollution. And I think it is not alone for this company. Many traditional energy companies may be classified as not ESG friendly, but I think it is not the biggest concern for this company.
Daniel sets a target price of $34 and a stop loss of $25. Daniel uncaps a consumer staple for his next stock choice, CR Beer, stock code 291. The company is the leader in China's beer market, producing dozens of brands of suds in 65 breweries across the country.
Demand for the beer, the market's overall demand is relatively stable, irrespective of the macroeconomy. And going forward, in case the global economy sinks into recession, beer's demand should be relatively stable.
Daniel thinks the country's common prosperity policy will improve people's incomes, enough to drive them up the brand ladder to more expensive brews. The company's steady movement into higher margin brands will improve its income in the long term. Business is also set for a boost as the World Cup next month will generate beer sales even as the tournament occurs in winter. Daniel says a COVID resurgence in China could cloud the outlook for the company.
In case COVID resurgence comes again, and that would hurt the sales of catering and in turn hurt the sales of beer.
He sets a target price of $56 and a stop loss of $42. Another challenger, Patrick Yu, also likes CR Beer. He says inflation can't last forever, especially with the Fed on a campaign to kill it with interest rate hikes. He expects the global trend will also see an easing of raw material costs, which will improve CR Beer's margins.
From the end of the second quarter, we can find that the wheat prices already retreated from the peak and around more than 40%. And therefore, I think that the raw material costs will drop a lot in the second half, and it will help to lift up the profit margin in the second half.
Patrick says even in a serious economic downturn, beer sales tend to be stable when other consumer stocks tend to weaken. Patrick sets a target price of $55 and a stop loss of $46. Next, Patrick falls back on an old favorite, mobile telephone provider China Mobile, stock code 941. Patrick says investors shell-shocked by the bear market might prefer the company as the dividend and cash flow offer stability in a volatile market. It just might raise the payout ratio even higher.
I think that the dividend yield can be reached around 9% plus. And I think in this situation, because due to the US 10-year Treasury bond yield is also around 4%. And therefore, I think that the other risk asset investment should have more than 7% dividend yield at least.
Patrick says the company's trading ban in the U.S. has already been priced into the stock. The main risk to the company would be a long slowdown in the Chinese economy. But again, telecom providers are especially robust, even in a recession.
Telecom service is one of the necessary business in nowadays daily life. So I don't think that it has a very serious affected by the economic downturn.
Our third challenger is stock commentator Patrick Poon. His first stock is energy company Sinopec, stock code 386. Patrick says the company is preparing to buy back about 10% of its shares. Income has been buoyed by a strong gas resale and trading business. Its dividend policy is also attractive.
They have a very high payout ratio for the dividend, and then for full year for 2022, I think is about 10%. The dividend yield will be. So this is good for investors because these days, we are looking for defensive stocks better because the market is so choppy.
Sinopec could also benefit from investments in new green energy to help the country achieve its net zero carbon goal. Patrick says, like most energy companies, Sinopec could be tripped up by a slower economy.
If the U.S. is going to have an interest rate hike to be continuous next year, so which will be a very bad thing to the whole world, and then it will bring more deeper recession.
Patrick sets a target price of $4 and a stop loss at $3. Patrick's second choice is another telecom stalwart, China Telecom, stock code 728. The company has made good progress in a new business, the online cloud market.
For the China cloud market, they have a market share of, say, for 2021, they have a market share of 10%, which is which is more than the China mobile. China mobile only have 8%. And I think the China cloud market is going to grow by 30% each year till 2025.
The company's main risk is fouling up its expansion into the cloud market.
If they are going to have a slowdown in the cloud business, then there will be a risk to them. But I don't think this will happen.
Patrick sets a target price of $350 and a stop loss of $270. We'll review their choices in a month to see who comes back to go head to head.
Starting in 2010, the government introduced a series of extra stamp duties to curb property speculation. But home prices have been falling since 2019. Prior to the policy address, many hoped Chief Executive John Lee would relax the heavy stamp duties, namely the Special Stamp Duty or SSD, the 15% ad valorem stamp duty, and the buyer's stamp duty. But only the buyer's stamp duty was relaxed. Now foreigners can get a refund of the extra stamp duty they pay for Hong Kong property if and when they obtain permanent residency after 7 years. This homeowner is disappointed that the government didn't relax the stamp duty for second properties. Nancy owns this flat. Last year, she bought another off-plan larger flat with a sea view to upgrade her living environment. Her new flat costs $24.9 million. She's already paid the 15% ad valorem stamp duty, which amounts to roughly $3.74 million. According to the rules, homeowners like Nancy can seek a refund of stamp duty if the first property is sold within 12 months from the start of the date of assignment of the second property. This is normally the date that a key to the property can be picked up. Nancy will receive the key for her second property from the developer in January next year. So she has to sell her first home within 12 months from then to get the refund. She's been trying to sell her first home since 2020, but with no luck.
But because of the COVID, there were restrictions and there was social distancing, so people would not come to view the house. Everybody having a hard time keep their employment. And at this point, nobody wants to buy.
If she is able to sell her current home, she'll only have to pay 4.25% regular stamp duty for the second home. And she can get a refund of 10.75% of stamp duty. This comes to $2.68 million.
If I'm unfortunate enough not to find one, then I have to forfeit my stamp duty, which I paid. All the money that I have is for my retirement plan.
Chief Executive John Lee says the SSD and ad valorem stamp duty are needed because property prices are high. But analysts hope the government will fine-tune the policy in the future.
Since the US government increased the Fed rate amazingly this year, so most of the people expect that the home price will fall. Such harsh measures, which may not be necessary during the property market downtrend. The only thing that government can help these families is relaxing the existing grace period from 12 months to a longer period, like what I suggest, 24 months.
The government could consider a period to allow them to sell as long as they can show proof. Proof meaning that the homeowner has been trying to sell the first home, maybe start from a price and then lower it by 5%, 10%, 15%, and still unable to get rid of it. Such proof.
This solicitor, Calvin Cheng, has advice for owners of two properties.
If they come to a very short period of time before the expiry of that 12-month relief period, then they can consider selling it to perhaps a close relative to avoid the loss of that relief. If you sell it to a close relative, such as to your spouse, children, for these types of sales, the stamp duty that is applicable is the lowest of the stamp duty. Let's say for a $10 million property, the lowest of the stamp duty rate would be at 3.75%. If it's beyond $21 odd million, that would be at 4.25%.
Whether the relaxation of the buyer's stamp duty will attract foreign talent and improve the property market is questionable, as the refund will only be granted after 7 years.
I would like to see it make some small changes, like the foreign talent coming to Hong Kong do not have to pay the duty upfront. If they sell it within a short period of time, then they have to pay the duty first before they can sell the property. Then it would alleviate the burden on the upfront money for the youngsters.
Up next, a look at the so-called bargains to be had in the luxury property market. Stay with us. Welcome back to Money Matters. Prices in the residential property market have fallen since the peak in 2019 before social unrest hit the city. The luxury sector has not been spared. In a buyer's market, analysts say homeowners may need to cut as much as 40% to lure buyers. Alice Kahn reports that so-called bargains can be found in the traditional high-end area of Kowloon Tong. Hong Kong residential property prices fell almost 8% since the peak of 2019. Luxury properties have normally withstood downturns, but this time some have not been spared. We checked out this 5-year-old project in Kowloon Tong, located across the street from Kowloon Sai Park. The project has 4 houses. The sizes range from 3,400 square feet to 4,400 square feet. It also has 140 apartments, ranging from 615 square feet to 2,000 square feet. Recently, the average asking price has dropped by 10%. One homeowner listed his apartment at $80 million in 2019. But today his asking price is almost half, at just $46 million. This week, we looked at a flat on the second floor. The flat is 880 square feet. The owner put it on the market in 2020 for $26.8 million, but she's cut the price to $20.78 million. Let's take a look.
Today I'm gonna show you Miss Lee's house.
First up, the living room, which is about 100 square feet.
Then it's very easy to lay out some big furniture, right?
Yes, of course. And as you see, this wall is very big. The width is over 11 feet, so that you can put a bigger sofa, 4 to 5 feet, sitters. And as you see now, this is a small sofa, and if you put it in here, and you can see the view of outside.
Then how about that area? What sort of furniture we can put over there?
Here you can put a big screen for TV, projector, and also a cabinet.
Vincent, this is a cabinet here. Then can we fit other furniture?
Of course, for this size, it fits a grand piano because it fits for the families uses.
There is a floor-to-ceiling window in the living room and a balcony outside.
But Vincent, this is a dining area, right?
Mm-hmm.
What's the size?
The dining area is over 63 square foot.
But this table is very small. Then can we fit a larger table?
Of course, if you remove the cabinet here, and then you can put a table for 6.
How about this side? Then can we put a tall and larger display cabinet?
Sure, you can put a tall and narrow because it can open the door.
Vincent brings us to the master bedroom with its ensuite bathroom.
Vincent, this master bedroom seems very large. What's the size of?
The size is over 130 square foot.
Well, it's so large, it's even larger than the living room.
Exactly.
Then is it easy to find such kind of a large master bedroom in Hong Kong now?
It is really rare because for the new units, it's only around 80 to 100 square foot.
The owner has a queen-size bed against the bay window.
Can we fit a larger bed, like a king-size bed here?
Of course, for this size, you can put the king-size bed here and also put a bedside table around it, and you can walk around for the bed.
Vincent, there's a huge closet here.
Yes, of course. This one is a 15 feet long closet. There's a lot of compartment inside. You can put all sorts of blankets and clothing in it.
Then what if the future buyer doesn't want a larger closet?
Oh, you can actually demolish part of it. And the size, you can fit a 2-seat sofa and even a small table here.
Its ensuite bathroom is 35 square feet with marble floor and walls. Large cabinets provide ample storage, and you can choose between a shower or a bath. The second bedroom was turned into a walk-in closet, pretty large at 60 square feet.
Can we turn it back into a normal bedroom?
Sure, if it's a single bed here, and for the tall ceiling, you can put a bunk bed as well. The ceiling is 11 feet tall.
But it doesn't have window in this room.
Oh, actually, the window is back there because the owner put a bookshelf here, and there's a big window behind it.
The guest bathroom is a key selling point.
What's so special about it?
For the new buildings, they only have standing shower. And as for the future buyer, if they have a guest coming over, they can enjoy the bathtub.
The kitchen is about 50 square feet and well-equipped. The unit is in good condition as the homeowner spent $400,000 on the renovation.
What is your theme?
My theme is minimalism. When I say minimalism, it doesn't mean that I have nothing. I try to add some focal points to make this dining area more interesting.
But it also has some Western style, right? This is mirror. Where does it come from?
It was actually given by my mother when she visited Italy. She thought it will look nice on my house, so that's why she brought it to me. This one is given by my friend. I believe was drawn by the Western artist, but it gives a more of a relaxed feeling.
She decorated the dining and living rooms with chandeliers.
This is very elaborate.
Yes, you can say that. I want something interesting to go with it. So I bought this with a Western style so that I can have something fun.
Will they stay?
Yes, if the buyer wants it, I'm more than happy to give away those 2 chandeliers for them.
Most of the furniture you have are very slim, and you don't have any hanging cabinets. Can you tell me why?
Well, actually, I love spaces, and as you know, Hong Kong, we don't have much space at all. So I try to maximize my living by having slim furniture.
Pastel colors are the theme in the bedroom.
Miss Lee, you have some porcelain lights in this bedroom. Then are they antique?
I guess so, because it was given by my mother 35 years ago.
Will they stay?
I'm sorry, it has to go with me.
But this pink cherry blossom chest can stay.
I believe it was about $20,000 at that time. It's my dressing table.
Dressing table?
Because I know Hong Kong is very space conscious, and I can put my cosmetics on the first drawer.
She says she's willing to sell some of her other furniture if a buyer wants them.
Vincent, now the owner is asking $20.78 million. Is her asking price reasonable?
Of course, because the bank estimate value of this flat is 21.4 million. So this is already lower than the bank value. In terms of the dollar per square foot, this flat is $23,533 per square foot. In Park in Venus, the dollar per square foot is around 23,533 to 31,180. So for Miss Lee's apartment is already the lowest price.
Vincent, what sort of buyer would like to buy this unit?
For example, Xbox, because as you can see, the tall ceilings, they tend to like the space and very easy to lay out the furniture. And also this area is a very laid-back area, but also approximate to the busy area.
China's economy rebounded at a faster than expected rate in the third quarter, but analysts fear a more robust revival in the longer term will be hampered by persistent COVID-19 curbs, a prolonged property slump, and global recession risks. The world's second biggest economy expanded 3.9% in July-September from a year earlier, outstripping the 3.4% forecast and faster than the 0.4% growth in the second quarter. Demand again waned at the end of the quarter as a summer flare-up in coronavirus cases led to lockdowns, pointing to an uncertain path to recovery. Further clouding the outlook, China looks set to continue with its ultra-strict COVID policies endorsed by the ruling Communist Party, which wrapped up its top leadership reshuffle. The new lineup of China's top governing body has heightened fears among investors. Beijing will continue ideology-driven policies at the cost of economic growth.
That's the show. Thanks for watching. Next time on Money Matters, how a year and the crypto winter have affected NFTs and the digital art market. See you then. Good night.